All right, guys, welcome back to the channel for another massive year, the final years of the 18.6 year cycle. We are running into the peaks across the board. I've got a lot for you on that and how inflation could kick off again, but that could be a good thing for Bitcoin, cryptocurrencies, stock market, real estate. Heaps to get through in today's video on your home. I did it. Of macro cycle analysis with me, Jason Pizzino. We're going to cover Bitcoin, cryptos, the stock markets, plenty of economic data there as well, and of course the real estate cycle. Make sure you hit the like button, subscribe to the channel. Nothing of that nature has changed with YouTube in the new year, and links in the video description are all there. Use those links so you do not get scammed out in the marketplace. I do not have an Instagram. I don't have a Telegram. I don't have a WhatsApp. Links in the video description. Okay, let's go with the agenda here. 18-year cycle, US real estate, economic cycle, USD cycle. We've got some signs there that we've got further upside to go before potential downside. Signs of inflation returning. Pretty big breakouts in energies at the moment. The stock markets are still tracking sideways. Crypto, Bitcoin, the shorts, the longs, the 3-day rule where we currently sit with BTC at the moment. The USDT dominance has been an absolute game changer when it comes to understanding the direction of the market. And of course, we'll get into cryptocurrencies. So to kick it off, a little bit of data like the old days early on in the video. Some cyclical clues for the US dollar. US dollar has been in a strong trend since bottoming in August. January, February 2025 look favorable, and we've seen the US dollar just break out. We saw it break past 108, now hit 109. The US dollar was strong in 2024, but an important cycle is ending. So the beginning of the year, or the beginning of the first year in this particular cycle, tends to show pretty strong gains. So we could see further upside for the US dollar. That's what this is showing here on the side, January, February, green and up. However, looking at the rest of the data here. Now this cycle goes back 56 years, just looking at 4 years of down, 4 years of roughly up. So it's about an 8-year cycle. Each of this time, you can see the percentage of times that it was down is 100% of the time. Now, of course, nothing is going to be perfect like this. And obviously when more data points come through, maybe it turns out to be a positive and then you don't get 100% hit rate. But the point of this is along the lines of the winner's curse phase, of course, into the end of the 18-year cycle. The US dollar has been up for over 3 months. And in that time, we also saw Bitcoin rise. We saw altcoins pop off. We saw the stock markets go up. And we're also seeing energies go up. Naturally, when we see the US dollar rise, that often has a little bit of weakness, or it shows weakness towards the other commodities. And in this case, we've all seen the commodities and other assets increase in the face of a strong US dollar as well. So if we were to see a turnaround in the US dollar potentially over the second half of 2025, that might fuel those assets to continue to increase if they are still in a strong position. So it's going to be an important one to watch. And if we see more of the 3-bar rules show up at key turning points, just like we saw at the lows back in August and in September before this massive rally to the upside, we'll be watching for the same sort of signal to come in should we see any sort of resistance at the next key levels, 112, 112.8, call it 113. So we're looking out for 112 and 113 are the next numbers to the upside. The first major one there at 112 is the 50% extension. So this is from the low back in 2020 to the top there, 2022, projected off the current cycle low there in July. And that gives you that 50% point of roughly 112. So an important one to watch over the coming months as we see the strength in the first 2 months, generally speaking, over the last 56 years. After that point, well, at least the market may see this decline like it has done over the last 56 years, going from the first year in this particular cycle into the end of that 4th year. So it's starting from the 31st of December 2024, and then you count forward 4 years. So that could be into 2028. So quite a long time there for this signal to continue to watch. But this is all part of this second half of the real estate cycle. So over a longer period of time, yes, we could see the US dollar continue to rise. We'll obviously watch 112, we'll watch 113, 115, all key resistance levels. If we were to see it drop, that could continue to spur on inflation. And like I was talking about in the intro, at least making the point here, we've got signs of inflation potentially returning. This could be very, very early. So we're looking at energies here. And if we are very, very early, there is a higher chance of being incorrect on the call, but just continue to watch the charts. As we look at energy here, there has been a short-term breakout. So I'm on the weekly chart here, throwing on to some indicators, a breakout of 72 bucks. Key level that we're watching, 24 hours to go for closes above $72 for oil. These are the energies. You're also seeing heating oil break higher, 24 hours to go as well. That could be a close above $2.35. The low was in 4 months ago, and you're starting to see a break. This could be one of the highest closes here since July. So over 6 months ago. You've also got natural gas, which has been doing pretty well since those lows back in early 2024. Big break up higher and closes above roughly $3.50 would still be a sign of strength. And then also your heating oil has just started to close higher as well out of this breakout area. But the stronger ones that I'm focused on are oil, just looking at this in the short term, heating oil, and then also natural gas. So if we are still seeing signs of energies going up, this could be part of inflation. But this is pretty early days, and I'm only mentioning it to you here on the channel because that's what the charts are that's what they look like. They're showing up at the moment with these breaks above previous resistance levels. Now, this isn't a bad thing for Bitcoin or cryptos going up, at least in the next sort of 6 to 12 months. As we know, with inflation and prices going up, well, basically everything goes up, but it's just how long can it be sustained for? That's pretty much the question that you and I are trying to answer here. We still, I think, most of you watching here still think all the markets are going up, but eventually something will crack. So that's what we're watching out for. But while the trend is up, continue to ride the trend. And that's what we've seen here with the energy sector as well. As you look through some of the data here, this one here is basically just showing the data between when energies were weak, the energy sector was in a weak position, and then quickly rose to a strong position in a very short period of time. Generally over that period, 6 to 12 months later, you have a very positive return here for energy. So it could be that energies are still going up. There's an 80% hit rate, 24% increase, max or average max gain over the next 12 months. So it could be pretty strong there. Now, the market sentiment for the S&P 500 is resetting. We're hitting fear. Last week was fear, and prior to that was in extreme greed. If you take a look at the timeline here, you can see it's basically on a downtrend, lower highs, lower lows, and this is going to be important when we look at the fear and greed index for Bitcoin and cryptocurrency. So the crypto fear and greed index, as a very similar sign or very similar pattern in that chart had formed at the previous peak, which led to a 33% decline for BTC. For more on the market sentiment, we're looking at AA members feel the stock market where it will be in the next 6 months. And this is the most bearish they've been over the last 8 weeks. So you've got neutral here above 30 for the first time in 8 weeks, bearish above average for the 6th time in 7 weeks, and bullish, lowest reading since April 2024. So in terms of just the bullish reading here, that's the lowest it's been since April, so call it around 8 months. But when we're looking at the overall bearishness at the moment, this is pretty much one of the highest it's been, at least in the last few weeks, where this reading comes out basically once a week, roughly around midweek on Wednesdays. So we're starting to see a shift to that. That isn't a bad thing. It's good to see the market get more bearish so that we know that they could be further upside. When the market gets too bullish, well, then you're sort of coming towards some sort of peak, some sort of rounding top. And from what I've seen, maybe you've seen it as well, as we continue to show it on the channel, is when you start to get to some sort of lows or near the lows. We're not saying that today was the low, but when you do see this, it's almost like the market needs that reset. You know, people are a lot more fearful and they're just expecting further and further downside. Now, that of course was over the last, that was for 6 months. For the S&P 500, for a short term, this could be a low and you start to get a squeeze of the shorts. Everyone trying to get in short here as the market's already been down now for 16 days, 10 trading days, looking to take out the low which it missed in the last 24 hours. So if it does rise short term, you need to see the S&P over 6,000 points. The NASDAQ, similar position as well, except to put in a slightly lower low. So lower highs, lower lows are here. You've got a downtrend on the daily chart. So the 1 day, 1 bar, the 1 day, 2 bar is also in a downtrend, but the weekly is still up. So the longer term timeframe's not too bad at the moment. For the NASDAQ, needs a close above 21,600 in the short term and continue to grind out here. But as I've been pointing out, even if the stock markets keep coming down over this time frame that we've looked at, the support levels are still well and truly intact, and they are a long way off. We're looking down 19,900 for the NASDAQ. For a percentage move, that's about 6% from where it currently is, and from the top, takes it down roughly 11% from the top. And just to check the S&P 500, we're looking at it from the top to where it currently is. It's down only, just under 4%. Down to the support's 7%. Down to the 50% support is around 8%. So it's got plenty of area to the downside to reset to and still be in a macro bullish position. The Dow Jones is closer to those levels compared to the other two, but could be trying to base out here at least for a short-term rally. Short-term rallies closes are above 43,100, and then the swing top there at 43,750. So that could lead to at least some short-term consolidation and prices to attempt higher prices here. So the last thing we look at for the stock markets before we get into some Bitcoin and cryptos is, of course, MicroStrategy. Now, I pointed this out weeks ago on the channel that it looked like MicroStrategy could be in for a rough time. It was already down 30-odd% at the time. Here's the top. There's the low, 37%, 37.5%. We saw a top there in December. That was when Bitcoin was topping. So Bitcoin hit 100, 104,000. And then Bitcoin here hit 108,000. And from that point, at least Saylor says he sold some MicroStrategy to buy more Bitcoin. Now, MicroStrategy is well down, and Bitcoin, it's down, but it's just trading around 96, 97 as I film this video. Now, MicroStrategy is getting hit pretty hard, and it has broken a pretty important 50% level. You can see this little double bottom here that formed at around 317, 320, $320, bounced, failed very, very quickly. So now it's coming to test the 278. That is the major 50% level here. That's from the cycle low to the all-time high. Massive, massive move, 4,000%. If this breaks down, it's rather weak overall. And I would say that throughout the rest of this cycle, MicroStrategy, although it could go higher, although it could go from 300 or 200 and hit 400, so trade it, do what you want. Maybe it goes to 460, maybe it goes to 500. There's just less chance that it would break to a new all-time high throughout this bull market cycle. So you could be getting better gains elsewhere through this period when there's a lot of excitement around the markets. That's if MicroStrategy breaks and closes under $280. It can still come back and retest some of these lows here, lows and the 50% levels that will be created. That's sort of around that sort of $360 level, maybe up to around 420 to 450 as well. But yeah, we'll continue to follow that up on the channel. Like what happened in the previous cycle, it was a bit of an early warning sign that the overall market was, basically coming to an end. We're in the bull market. We're in this raging bull market. Everything's going crazy as people try to tell us. But I mean, MicroStrategy didn't do anything after the February top. We put in an April top, dumped, then double topped with November, which was Bitcoin's top. Bitcoin had April, 65,000. It had November at 69,000. Double topped and then came crashing down from there. In terms of a percentage, top to somewhere around these lows, it's an 80-something% from those tops, not even from its all-time high at the time. So another interesting point that we'll keep watching for signs of the markets. I want, coming to an end, and that doesn't mean it's tomorrow or today. It's just signs that you're seeing the tops form. It could be 6-12 months away, but it's just more signs that you need to be aware of. Okay, Bitcoin and cryptocurrency type. IRS delays crypto tax reporting until 2026. I'm sure a lot of people are excited by that, even though you've got to end up paying your taxes at some point. At least that gives it another 12 months for the industry to adapt to any sort of regulatory concerns. On top of that, now we are looking at some of the market data for crypto and Bitcoin. The daily exchange volume has been collapsing here. However, this time in December is generally when you see lower volume, but we look at all the data here, last December, there it is, we still saw higher volume in the market coming through. The December before that, we still saw higher volume. It did collapse mid-month, but then continue on. However, this time we're seeing the volume collapse. We need to see the volume come back in the exchange volume in order to push these markets to fresh highs, and most importantly, for it to be a sustainable move. I know people get very excited when the price goes up, and if the current top's 108 and it breaks to 109, they'll say, see, you're wrong. But if it's not done on sustained extreme, very high volume, higher than average, higher than the previous tops, it's probably short-lived. Short-lived can mean days, can mean weeks, just like what happened in 2021. I know we keep referencing that, but it's super important to understand where that volume is and what it's doing. Look at 2021, that's September. Then you had November, which is where that top came in at 69K, but it was way, way, way down from where it was in, May and April, where it had the $65,000 top, and then in early May, Bitcoin put in a lower top, but altcoins pumped up. You had ETH pumping and all sorts in May. So you had very high volume at that time. Then 6 months later, the volume was well and truly down. Averages were around 100 billion, and that time was around 160 billion at the previous top. So if something like that happens again, and in terms of price goes higher than where we are. So we're at 108, and then price goes to 120, 140, 180, whatever you want it to be, but this exchange volume doesn't keep up. That's another sign that you're on borrowed time and the game is ticking away. It sounds dire. I know people get really, really triggered and they think you're so bearish. No, I think prices are still going up. I think we'll still see higher prices, but now we're starting to count up all of the signs that the cycle is getting towards an end. And I'm looking at the cycle already going for over 2 years. We've been here for years. Make sure you hit the like and subscribe button so you can continue to follow the journey here. While everyone is calling out massive parties and it's never going to end, it's hard to say that, it's hard to keep showing face to say, well, there are some cracks. Just be careful at those tops. At the bottom, when everyone's saying that you've got further downside, you're an idiot for buying here, this thing is just collapsing, it's over, it's never coming back. Again, it's pretty hard to convince people that it's probably likely a low forming. That's exactly what we were doing here on the channel in 2022 at those lows when FTX collapsed and all sorts were going on. And more recently in that March 2023 when the banks collapsed, it's the same sort of thing. They were the lows, most weren't here, they didn't want to know about it. They come back at the tops, rinse and repeat, right? Speaking of rinsing and repeating, Fartcoin right here, it's also had some liquidations, but overall the liquidations have been relatively low over this period, obviously with all of the holidays. So we'll come back to that in the coming weeks when we see some more volume return. Google Trends, crypto, Bitcoin. The nice thing here is that you're seeing an increase in the search trends. So Google Trends, search volume for those words. Crypto is up and Bitcoin is up over the last couple of days, especially over a quieter period. Maybe people are searching Bitcoin and crypto in their Christmas break. I don't know. Looking at fear and greed. So that's a good thing. Obviously, we've got lower volume in the exchanges, but at least people are still searching it. And so I think they'll come back at some point, and obviously start to pile their money in. Okay, fear, at least that's the hope, right? Fear and greed index at 74. Still at greed here. I don't like that we're still at greed, although we've been down a fair bit. 15%. I think the market still needs to see some sort of reset in terms of market sentiment, like we saw back in the March peak, got to April, then got to May, and finally saw at least a neutral reading here in May. So that's 2nd of May. Obviously, the dump was on the 1st of May. And it's a very, very similar pattern here. Lower highs on the market sentiment, lower lows also on the market sentiment. You got one big flush out, two big flush outs, higher low, continued to take its time. Then you got the big flush outs through July and August. Now, I'm not saying that this section has to happen. I'm not saying that this top has to be 8 months long. I don't know if it'll be 8 months long. I don't think it'll be 8 months long. I think something would be wrong if it was 8 months long. I think I think you'd probably see maximum half that. But in terms of the short term, maybe 1 to 2 months, like we've looked at when it comes to the 3-day down signal for Bitcoin and cryptocurrencies. So in terms of the fear and greed, it looks like we've got at least some time here, probably some flush outs to come over the coming weeks. At least that would be the best case scenario for everyone here. to flush out those last weak hands before we start to head higher over the coming months. The price chart, you've got the resistance still at 100K, and I've got here roughly around 100 to 102. 50 in the last 24 hours, we've broken past the short-term 50% break. You can see we were rejected twice now off the 100K level. That was on the 21st of December and also on the 26th of December. Came down, got to our $91,000, and we've had a couple of days up with an inside day here. Nice close above 50%. So it could be some short-term stability at least, maybe a retest of $100 or $102,000. Now, in terms of timing, the previous video I was looking at time to new all-time highs based on what we've seen in the past. We're now into our 17th day underneath the all-time high. This is the longest correction that we've seen since breaking out of the $74,000 top. So the 3-day rule strikes again. It worked very, very well. I thought of something that could work for people who still don't understand the 3-day rule. Change the damn colors of the bars to both white, and now you're not confused about reds or greens. Now you can just see lower highs, lower lows. Very, very simple. So you don't get confused with the colors, because the colors don't mean the 3-day rule. And that's the beauty about it. People don't understand it. They don't know how to use it. And essentially you've still got an edge on the market because they still can't use that rule properly, and the majority of people can't. Hopefully you can. As for Bitcoin, closes above 100 and consolidation above there, that's going to be strength for the bulls to then attempt that 108. Ideally, we see exchange volume come back. Without that exchange volume, could be a little bit of a shaky move, even if it breaks past 108, basically that previous top. Otherwise, we look to retest some of these lows here at 91, going back to some sort of critical support area about $85,000 to $87,000. So while it still remains in here, it's anyone's game. USDT has also been a fantastic chart here for the trend of the market. Very similar patterns to what happened in 2021 as well. Doesn't mean that it's all over, but if we take a closer look here, rejected at the 50% of the previous significant moves. That was a top there in November. Ideally, you want to see this chart go down. The dominance in USDT go down generally means more of the money is going to flow back out into Bitcoin and cryptos. That was the high before the election, which basically broke down the dominance here. Everyone started to pile back into cryptos. So using that top to the current low for the USDT dominance, basically got dead on the 50%. The top there was 4.61 and the 50% was 4.61. So it got rejected dead on the 50% level. Learn how to use those and your trading is going to be much, much easier. Now, over the last 24 hours, we're broken down from the short-term 50% level and the key price there at 4.2%. So I'm not getting overly excited yet. It's still got a lot of room to move to the downside. If I can draw a diagonal line. Anyway, forget about that. To get us out of any of this sort of consolidation, and it has to break past 3.7, 3.8% area. It can trend lower, put in another higher low, and then retest those higher prices. As I said, just like 2021. Take a closer look there. Again, same sort of thing. December, big breakout. Market ran to the downside. Throw in your 50% level. You see the bounce. Hits dead on 50%, 1, 2, 3 times. Retest, higher low. Hits it. Breaks down, puts in a slightly lower low from the previous one, but higher low from the actual low of the range. And then test the 50%, breaks above, higher low, breaks above, and that's when everything went haywire. May, everything broke down and went absolutely bananas. So that took from January into May, 4 months, 4.5 months for that to play out. Where are we now? I'd say we're about a month and a half into this move. You can see the breakdown in November, the low in December, the move there from roughly mid-November. We get to next week, that's going to be mid-January, so that would be around 2 months. If this plays out like last time, you still have another 2 months after that point. And I hear it now. People say, well, stupid, Q1 is usually green. It has to be green. It doesn't have to be anything, really. If we just keep following what the chart is saying, then just keep following what the chart is saying. Just keep working with the trend. If the trend is telling you otherwise, compared to the old, Q1 has to be green, then follow what is on your screen and not what we're hearing out there around certain narratives. It could very well be green, but for now, it's not on that side just yet. It can still get there. And I think it will eventually get there, even if it's not in quarter one, because we're having a reasonably good time here with this correction for BTC. Currently at 96, and this is the weekly chart now. So this could still give us a bit of a move up to the upside, come down over the next few months, and then work its way higher through, who knows, February, March, and we're still in a very, very strong position overall because Bitcoin is still above $73,000, $74,000, which are the previous tops. So it's still in a very strong position there. And as we looked at with the monthly, it was the second highest monthly close after all that. This is not a great looking bar. However, we can still put in higher lows and then continue to climb our way higher. Now onto altcoins, and some of them are looking better in like a stronger, better position than BTC at the moment. I guess many would expect that because, of course, an altcoin season is expected, but at the same time, just follow the charts. ETH USD, good support here at 50%. It's $3,300. It so far has not been able to break under those lows, and you're getting higher lows forming here. So in a, I guess, relatively strong position. Even better is above these lows at 3,500, these lows 3,500, and then above these tops again 3,500. So 3,550, nice round number, closes above 3,600. Going to be pretty strong for ETH moving forward. Solana has also had a nice pump up, got past the 202 level, which we were watching over the last several videos after it had broken down, sat on the 50%, gave us a little scare, broke higher, higher highs, higher lows, and now $211 is the next key level before it attempts the $230 level. Sui, holding out pretty damn strong. It hasn't broken down from any of the previous lows and continues to put in, well, higher lows. So it's in a relatively strong position. Good to see it slowing down and consolidating at these higher prices. So I'm looking at anything above $3, the range of $3 to $5, consolidating there, putting in high lows. When the rest of the market breaks, this would potentially also break relatively strong. And XRP, you can't make a video without XRP these days. It's closed dead on the 50% level, $2.40. The 50% level, $2.40. If you round it to the nearest cent, dead on $2.40. So it's still early days, potentially still consolidating above the $1.90 level. Even if it breaks down, I'm still looking as low as $1.70 as any sort of reasonable strength there in a consolidating move before the markets get going. So some altcoins are looking relatively good in, I would say, strong positions to tackle that next phase should we see higher prices. And of course, I think we'll see higher prices, but of course you need to do your own analysis as per usual, as you do with liking, subscribing to the channel, links in the video description for our free crypto and economic report coming out in the next few days. And of course, links to our channel sponsors, Bybit, Bluffin. You can get debit cards, no KYC. Aussies, you got your $20 of free Bitcoin with SwiftX. And I'll be back here with the next update. Stay tuned. Have a fantastic weekend. Maybe I'll see you then. Otherwise, take care and peace out.